Hi, everyone. Thanks so much for joining and what has been a very, very volatile start to the week. I don't think a week ago any of us were expecting NVIDIA's stock price to tumble by 17% or the US stock market to have some sort of existential crisis about a Chinese rivalry in the AI space. But that is what has happened. And we did see that big plunge on Monday, which dragged the whole of the NASDAQ lower. It dragged most global stocks lower, although there was a notable underperformance in the US tech space. Now, if we take a look at the NASDAQ futures chart, which is here, as you can see. So this is futures, what futures are pricing in before the US Open later today. So this shows 3 days worth of price action going along nicely on Friday. Big plunge, 3% decline in the NASDAQ on Monday, as I'm sure you're all aware. And then we are making a tentative recovery in the futures market, so in the pre-market in the US. So it does look like after all that DeepSeek fears, so this is the Chinese AI model that was completed but apparently very cheaply, which has really threatened the dominance of the US in the AI space. It looks like we are making a bit of a recovery. Now, stocks there are up about 0.7%, so it's not a full recovery, it is a tentative recovery, but we will be watching very closely what happens next. Now I'm going to show you another chart here, which is the Magnificent Seven. Just bear with us a moment. This shows you each individual member of the Magnificent Seven. Now there were a few memes and things going around to say, well, they're not so magnificent now. But what I'm trying to show you is the difference in performance out of these Magnificent Seven stocks and what it means. So we've got NVIDIA, you can see plunged off a cliff. This is over the last month. So actually NVIDIA was kind of trending. It wasn't as good as it had been since the start of this year, but it really plunged obviously yesterday, and it's really lagging there along with Tesla and also Apple. Instead, what we're seeing, Amazon and Meta actually rose yesterday. Now, why is that? Because cheaper AI models will actually be good news for people like Meta who are building out their AI infrastructure and their AI capabilities. So there are winners and losers from this, and we're not seeing necessarily a uniform movement in US tech stocks. So Meta, for example, as I said, they actually managed to do pretty well. They were very resilient on the back of DeepSeek, and that's because it could be good news for them. So it's not all bad news what's going on here. There's a bit more competition. Yes, it's bad news for NVIDIA. They may struggle, although its share price is also higher by 5% in the pre-market. It's not a full recovery from yesterday's decline, but there is something going on there. Now, we also have earnings season. This week, we have Meta, we have Microsoft, and we have Apple reporting earnings on Wednesday. So it's going to be a really busy day. Now, I want to show you another chart. Sorry, just bear with me, guys. I am going to try and bring up chart 3, if that's possible. So we are just looking here at, this shows you the Magnificent Seven EPS growth annually for the next few coming quarters on the right-hand side there. As you can see, earnings growth for the Magnificent Seven is expected to slow. Now, they are the orange bars in this chart. The ex-Magnificent Seven for the S&P 500, they are the white or the kind of cream bars there. Now they are expected to slow. So the Magnificent earnings growth is expected to slow, but what can you see very clearly? That they're expected to outpace the rest of the market. Now, what we've seen in Europe, we saw SAP. Now that did come under pressure yesterday. That's the German software company. That made a really strong recovery today. After it announced earnings, it beat profit and revenue forecasts, and it said its AI capabilities were helping to drive profits and revenues. Now, if we see the same for Meta, if we see the same for Microsoft, if we see the same for Apple as well, that could really boost their share prices. So SAP shares rose to a record. Will it be, how ironic, European tech firms actually leading the way for their US peers this earnings season? So we will have to see, but there's a huge amount of event risk there, and we certainly wouldn't write the tech firms off yet. Now, the other thing that we've got coming up is an FOMC meeting. So that's also on Wednesday evening. So ahead of those earnings from the likes of Microsoft and Meta, we have an FOMC meeting. So no change is expected there, and we are going to get a press conference and a statement. We expect the wording to be incredibly vague. We do think the market will be watching very carefully to see what does the Fed think about inflation. Now, inflation actually pulled back a bit in January, but we know that there could be some inflation pressure building. Are they going to be optimistic about the prospect for future rate cuts because of that pullback in inflation in December? Or are they going to say that there's still upside risks to inflation, which could then knock the rally, particularly in the ex-tech rally, so the broader market rally? Because obviously some of that rally is on the back of the Federal Reserve cutting interest rates at a decent pace. So there's a huge amount to go for. Just remember the FOMC not expected to change policy tomorrow, when they do meet on Wednesday. The sell-off in tech stocks seems to be easing a bit from yesterday. Thanks so much for joining, and we hope to see you soon.